Hello and welcome to this July 12th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, today we are taking a look at the semiconductors. On Friday, we looked at the real estate investment trust, the REITs, showing how they provided a little bit of clues for us in terms of the financial space. Now we're taking a look within the technology group and looking specifically at the semiconductors. A couple things really stand out to us when we look at the semiconductors. Number one, this is a group that tends to give us some advanced clues as to what may be happening in the overall market. Perfect example occurred back at the end of 2008. Now you'll remember that the overall market bottomed in March of 2009. But take a look at what happened on the semiconductors. This is the actual price of the semiconductors, and you can see that we actually bottomed. We put in a low on the stocks back in November of 2008. And check out the relative performance. This line depicts the relationship of the semiconductors to the S&P 500. And notice that in December of 2008, the semiconductors bottomed relative to the S&P 500 and began outperforming for a few months before the S&P 500 bottomed. And I think that's pretty important, because many times we will see that, the market looks ahead and the market starts to look to see, what kind of manufacturing is going to take place and so forth. And when you think about the chips and the role that they play in our economy, once we start to see some strength in the chip sector, many times that's when we start to see strength in other areas of our economy follow. And as a result, sometimes when you get the early warning signs from the semiconductors, whether it's a good warning, a bad warning, whatever, it can help you in determining the overall market direction. And the fact in this case that we had a bottom in the S&P 500 that was going to form, simply because the semiconductors and the market itself don't generally move in opposite directions. The semiconductors usually are a leading economic indicator, and as a result, when we start to see the semis performing or outperforming the S&P 500, it's worth noting. Now, what we've been seeing really since about the second to third quarter of 2009 is a squeezing relative performance between these semiconductors and the S&P 500. After clearly outperforming, and it's very clear that we were outperforming for about 7 or 8 months, it's not quite as clear. We're going sideways. We are still trending higher, but notice that the moves to the upside, this uptrend line, is not sloped nearly as much as the upper downtrend line. And what this is causing is a squeezing in this triangle, and it's going to be very interesting to see how this breaks, because I think whichever way this breaks, to the upside or to the downside, is more than likely going to determine what the overall market is doing. Now, while we're in this squeezing pattern, it is important to note that the semiconductors as a group are actually downtrending. The reason that this relative line is going up is because the downtrend in the semiconductors is not as great as the downtrend in the overall S&P 500. So that's important. If this breaks down, if the SOX begins to underperform the S&P 500, then I think the overall market's got a lot more weakness ahead, and that's why we want to pay very, very close attention to this relative chart, and let's see which way this breaks. I hope you've enjoyed our presentation today. Be sure to check out our Chart of the Day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the Chart of the Day emailed directly to you. Happy trading.